Hello friends, the Bank Officers Associations have sent a letter to Nirmala Sitharaman, Honorable Minister for Finance Government of India, opposing the reported move of the government to privatize public sector enterprises. It is reported in the media that the Union Cabinet has approved a policy to privatize public sector undertakings, that is PSUs, which is expected to be announced in the forthcoming budget scheduled for the 1st of February. The media reported 2 days back that the Union Cabinet had approved the privatization policy, which will lay out a roadmap for the presence of government-owned entities in strategic and non-strategic sectors. This policy is part of the Atmanirbhar Bharat package announced by Madam Sitharaman in May 2020 as a coherent policy where all sectors would be open for private sector participation. The government had then announced its intention to limit the presence of PSUs to 1 to 4 in strategic sectors and to privatize, merge or bring the remaining companies under a holding company. The policy also suggests that the government should exit from all non-strategic sectors. According to the initial draft of the policy floated by the Department of Investment and Public Asset Management, around 18 sectors were classified as strategic sectors, and banking and insurance happen to be coming under the strategic sectors. It clearly means that the privatization policy will cover public sector banks also. This is the reason which prompted the officers associations, that is IBOC, AIBOA, NOBO and INBOC, to send a joint letter to the Finance Minister opposing the reported move for privatization of public sector undertakings. In the letter, the associations write that the privatization policy will only weaken India's self-reliance and make the country dependent on foreign and domestic private capital, which does not augur well for the future of the country. After the wave of mergers of some public sector banks undertaken by the government, there are only 12 public sector banks or PSBs remaining now. These PSBs own around 60% of the total banking assets in the country and account for 64% of all bank deposits and 60% of total loans and advances. If the proposed privatization policy is to be implemented, it would amount to privatization of at least 8 PSBs or 8 public sector banks, which will put an end to the market dominance of the PSBs. The unions remained firm that it was the PSBs created through nationalization which led to the growth and development of banking across the length and breadth of the country, including unbanked rural and remote areas. The dominance of the PSBs insulated the Indian economy from the worst consequences of the 2008-2009 financial crisis. Crucial schemes of financial inclusion like the Jan Dhan Yojana and Mudra have been implemented by the PSBs much more rigorously than the other segments of the banking industry. It should be appreciated that despite the ever-mounting bad debt accumulation in the recent past caused by corporate debt defaults, massive haircuts through the debt recovery channel under IBC and burgeoning NPA write-offs, the PSBs have registered positive operating profits year after year. It stands testimony to the hard work and efficiency of the officers and employees of the PSBs. In this backdrop, and at a time when the national economy is still reeling under the impact of a severe recession caused by the COVID-19 pandemic, it's difficult to understand the logic behind Union government's insistence on privatization of PSUs in general and the PSBs in particular. It is the PSBs, regional rural banks and old generation private banks who have been successfully implementing all the schemes of the government to provide the much needed fiscal stimulus during COVID times. The development of infrastructure in the country, that too in the absence of any development financing institutions, has been possible only because of the contribution of the PSBs. It is clear as daylight that the only beneficiaries of PSB privatization would be those entities who still owe the state-owned banks thousands of crores of rupees in corporate debt. While private sector banks like the Yes Bank and earlier the Global Trust Bank, NBFCs like IL&FS and DHFL, cooperative banks like Punjab and Maharashtra Cooperative Bank, that is PMC, have witnessed failures in the recent times, the PSBs have continued to ensure financial stability and security for the depositors. Similar experiences in the past point out that the strengthening of PSPs is the only way forward for building an efficient, robust and stable financial sector in the country. Therefore, the unions argue that any proposal for privatization of PSPs is retrograde, ill-conceived and thoroughly against the national interest. They warn the government that any step towards privatization, dilution of government equity and or further mergers and amalgamation of PSPs would face stiff resistance not only from their organizations but also from all the major stakeholders as well. So, in their joint letter, the associations are requesting the firm to rescind any such privatization proposal not only for banks but also for all the PSUs. They suggest that the union government should rather initiate policy discussion on the ways and means of reforming and strengthening the PSPs in the country. This letter was written on the 29th of January and the budget session is to be held on the 1st of February. Rather than placing on record their objections against privatization of banks, what purpose such a letter would now serve is anybody's guess only. The unions had earlier expressed their opposition against merger of banks. They had sent letters, conducted agitations and gone on strike and taken out all the weapons in their armor to defeat the government's designs. But we have seen the result because the government has moved on with its plans and implemented the mergers and amalgamations, showing scant regard for the opposition of the employees and officers. Therefore, if the government has really decided with a plan for privatization of PSUs, as reported in the media, there is every chance that the government may venture to test the waters by privatizing at least one or two public sector banks this time. Of course, we cannot predict what is in store for the PSBs now. So, let's wait for the announcement the FM is going to make on the 1st of February, which will decide the fate of public sector banks in India. Thank you.